gone.
Yeah.
Yeah, you're gone from the market. Yeah. This right here can create 6, 7, 8, 10 opportunities in a day.
Yeah. Just in that 2 hour window?
Yeah.
Yeah.
Yeah. And if you take the best 2 opportunities, you are done for the day.
Yeah.
If you're in one contract, the first one you take 20 points, the second one you take 20 points. You are done.
Yeah. That's it.
Yeah. You know. So what I do right here is this is the daily level. This was my own. Hold on 1 second. I'll be right back.
Yeah.
Sorry about that. So the way I mark um, my demand and supply level is I use minimum of 5 aggressive candles for
Okay.
the buying. Minimum of 5. That's my own method. I do minimum of 5. So what I do is I come here, horizontal, see, I do the wick right here.
It's white.
Let me, yeah, let me let me change the background to black. Okay, here we go. Okay, let me do line. Okay, so right here, I'm gonna make this green. So I'm gonna go all the way. So what I'm looking for minimum of 5 candles. Anywhere I have 1, 2, 3, 4, 5 candles. So this right here is gonna be a sell. So I'm gonna change this to red. You know. So the red that you saw on the metrics the last time, the level that you saw on the metrics, this is where it came from.
So you're not looking for 5 necessarily in a row, just 5 in the move.
No, five in a row.
So I'm not seeing 5 in a row after that.
Oh, I'm sorry. I'm sorry. Maybe I missed something. Oh, oh. The first one, I know the first one. Yeah, this is the first one, right?
Right. So that one's
Yeah,
5 up. I mean, that's
yeah,
obviously a long
that's
demand
that's
level.
demand.
Yeah.
Okay, the supply. Okay, that means I placed it at the wrong place. Okay, let's look for a 5. Let's look for a 5. Okay, here we go.
There's
Here
5.
we go. Here we go. Right here. So this right here, I expect the markets to react because this is a daily level. So what this means is we've had 1, 2, 3, 4. How many? This is 1, 2, 3, 4, right?
Only 4, yeah.
Oh, I think I'm missing something. Oh, yeah, you see, I've been on the screen for a long, so My brain
I
is
mean, you're
kind
at
of freezing.
18,000, so we're pretty far back.
Yes. Yeah. So I'm going to do it. This is the way I'm going to do it all the way.
Mm-hmm.
All the way. So this is 1, 2, 3, 4, 5. Okay. This is 1, 2, 3, 4, 5. Okay.
And you're just doing candle body, right?
Yes. Yeah. The body of the candle. Come on. So let me move all the way to. So you can see I did this right here. I did this at the
Back here.
beginning right
Right.
here. Huh?
Yeah.
But when market got here, did you see what happened?
Yeah. Look at that big candle out of there.
Yes, that was the reaction, and then the market got back up. So the daily, if I was to be using my personal account,
Mm-hmm.
then I'll use the daily.
Yeah.
Yeah. So the daily, you can only use the daily for a long move.
Sure.
Yeah, like maybe
Like
maybe
there's another five bullish
yes,
just to the right of
yes,
where you are.
yes. But at least you get the concept. So that way
Yeah.
we can move from the daily. If I'm playing options, for example,
Mm-hmm.
then I use the daily, weekly, and the monthly.
Mm-hmm.
So that way I could, leap options.
Sure.
Yeah, but for this purpose, let's go back to the 4 hour. Yeah. But normally I start mine from the daily, then I do the 4 hour, then I do the 1 hour. So this is the 4 hour right here. We have so this is the 4 hour right here. If you go all the way down, yeah, you could see how the daily, this is the daily right here now. You could see how it's falling in between the 4 hours. You can see the market go up here and then came back. See,
Right.
reacted here within the 4 hour.
Mm-hmm.
So if you're standing right here and you're trying to buy 18,011, the market went down to, see, that's a lot, 918. But
Yeah.
guess what? You see a break, we get back up.
Right.
That's why you need multiple confluences because
Mm-hmm.
some of these things are not 100% accurate.
Right. It
But
just
when it,
gives you more. It just gives you more of an indication.
yes,
This
so
plus
that,
this plus this equals, yeah, there's
mhm,
you know something to
yeah,
look at.
yeah. So that way, let's see, let's flip from the daily. Let me use the daily candle here. See right here,
Mhm.
this right here works. And then
Right.
I think there's another one somewhere around here. See, right here.
Mhm.
And that's a sell. It's a sell. That's a sell.
Mhm.
So let's go to the front. The reason I'm using minimum of 5 candles, is because NQ, the way NQ moves, you have to protect yourself.
Mhm.
So some people use 2, 3, the more the better for me.
Mhm.
So that's the way I do it. So this is gonna be a bullish support.
So even though there's a down candle at the beginning of that run, you're going to put the line at the bottom of the red candle,
Yeah,
just
this is yeah.
that's the swing candle.
The bottom of the swing candle, yeah.
Okay.
Yeah, that's it. So let's go up here. 1, 2, 3, 4, 5. Okay. Here we come up here. That's it. So 1, 2, 3. No, let's leave this. Let's leave this. 1, 2, 3, 4, 5. Okay, come here. Okay, so we have gotten all the buys. Let's see if we have any on the sell side. Okay, I think we have one here on the sell. Where's the one here on the sell side? Okay. Yeah, I think I made a mistake. Normally what I do is I use this. So that way it
You can see where it started. Yeah.
Yeah, that way it doesn't stretch back.
Right.
So okay, that's it. So let's see. Do we still have any red one? Yeah, yeah.
So, okay, so you're putting them at the, are you putting at the beginning of the move or the end of the move?
The beginning of the move.
Okay, so that last one you just put, should it be up at the top of that move? Or did I
Which
miss
one?
something?
This one?
That one, uh-huh.
And then this is not even up to 5. So
No, but did you do it off the 5 red candles but that would be the end of the move, not the beginning.
oh, I'm see
Okay.
my
Just making
mental
sure I
my
understand.
my
Yeah.
my mental capital is drained.
I'm with you. I'm with you. I'm in the same boat. I'm going to have to cut this here in just a
Yeah,
minute because I
and
got to jump on another call. But
yeah,
yeah, man.
this is just the way, this is just the way it works. 1, 2, 3, 4, 5, put another one, that like that. When you're done putting it, you go to from the 4 hour, you go to the 1 hour, right? You do the same thing. And then when you go down on the 1 minute, this is what you're gonna see.
Right. We're here at all-time high, so we're probably not going to see anything close. But when we
Yes.
get there, now we know.
Yeah, yeah. And then from the all-time highs, because we are at the all-time highs and there is no level, then you might want to come down to 30 minutes.
Okay.
So
Just
when
to
you
get
come,
some sense of,
yeah, when you come back to 30 minutes, you're gonna get something.
you've got some areas that you're likely to trade into.
You see, when you
Yeah.
come back to 30 minutes, see right here, for the
Right.
30 minutes, it is 1, 2, 3, 4, 5. For the 30 minutes, get something here. This is a level right here.
Right.
Bullish. See? When you come looking for 1, 2, 3, 4. See? 1, 2, 3, 4. Okay. I'll be right back.
Yeah.
I'm not finished yet. So sorry about that. So
No, you're good.
we go here, you see, right now.
That's bearish.
Right now we have bearish. Bearish. So right now with this move, you know exactly where you're waiting at, right here.
Right.
So if I want to trade this, for example, let me see, I want to trade this on the 30 minutes. I'll take my Fibonacci from the up here to the down here.
Okay.
And then my box. So I'm going to do exactly what I did on the metrics here.
So you're just doing that with the supply and demand zone.
You can do that with anything. You
Okay.
can do that with the previous month high, previous month low, swing high, swing low, depending on the range. Once you find a range,
right,
you can use the Fibonacci, just like I'm using it, to create like a level that you're going to trade in. So this right here, oh no.
Box.
Okay. So this is it. So if you go back to the 1 minute,
you can see the movement at each level. That's nuts.
okay, let me see. Let me take this out. That's it. So you can see how this does. See?
Right.
Right here, reaction back. We got here. See how we're getting a reaction right here.
Yep.
So the market might be moving from here now down up here.
Okay.
You can see that.
Yeah. So just look for what I would look for would be an inversion signal. So inverted fair value gap, and then off we go.
Yeah, if we put, yeah, let me see what fair value gap.
I can see that 1 minute right there. So if I enter on the 1 minute, I would enter on that 1 minute fair value gap.
Yes, let me see what the fair value gap. That's why if you have some of these things innate, it gives you a further clue.
Yeah.
Let me see this one.
Oh, that's showing their version of supply and demand, not the gaps. Yeah.
Okay, let me see. No structure, no internal block. Let me see. Equal high, equal low, normal, fair value gap. White. See the fair value gap.
Right. So we've almost inverted that bearish fair value gap, and we're building a new bullish. So to me, that would be, if that was my level, that would be an entry for me.
Yep. That's it.
Yeah.
So you see that?
Yeah. Okay. I like it. Huh. I love looking at this stuff.
Yeah,
I guess
so it's
it didn't actually invert the fair value gap, but it's not painting the fair value gap that
yeah, but the level is still strong enough for you to hold.
Right.
You know, it's different from you getting a trade and then the trade just flush you on.
Right.
You are getting in at a very strong point when you know, even if something happens, you have the time to say, okay, the trade is not going to work out. Then you get out. You know, well, that's it.
Wow. I like it. All right, man. Well, listen, I so appreciate this. I'm looking at the time. I am going to be running late to something. So
Yeah. That's okay.
Thank you so much. This was fantastic.